Stocks surging on Wall Street today. The Dow climbing 476 points for its best day since November. All 11 S&P sectors posting gains led by financials. But check out what happened to the high-flying names like GameStop, AMC, Koss, Express, and BlackBerry. They all came crashing down today. So what should we make of this market action? Steve, I think there are a lot of people who are jumping at the chance to say this proves that all of this is over. Is it?
No, I don't think you could say it's over. We had a week, we had 5 days basically, and I think the world the financial world sees that it's not in the same hands as it used to be. So you have a retail audience, you have more people that are really listening to the market than ever before. So I don't think you could say that it's over. Now, the problem, Melissa, the reason why a lot of these names came back to earth is that there was a lot of regulation, speculation about getting locked up in these positions or not being able to buy more than one share. So I think people will, and the retail audience and the retail investor will wind up going to a different brokerage house or a different stock or a different sector. So we've seen that with silver. We've seen that all over the map. But think about it this way. We have more engagement. Think about how many people are asking you and everyone else on this panel what's going on with the marketplace. So I think the resurgence or the power that we've seen in the retail community, I think is not over at this point. We're just going to see it maybe in a different stock, different venue, different brokerage. But I think regulation sort of has to simmer down here because there was a lot of fear that brought the end to these trades.
I think it's really interesting that a lot of sort of the more established players on Wall Street might take a look at these stock declines today and yesterday, Bonawyn, and just assume that it's over, that in this corner of the market, the people who were invested in these stocks lost their shirts, they're out, they're going home with their tails between their legs. And, a lot of people still made money off of them. And as Grasso had said, even if they are out of these names, there are other names out there. Do you think that these retail traders go away? Because it doesn't, I don't know, maybe this is just my observation on this whole Reddit thing in Wall Street Bets, but it seems like they're engaged now. They are interested in the markets, even if it's not GameStop anymore or AMC anymore.
Definitely, right, and more trading than investing. We can, touch on that at any point. But you know what, affirmation bias is real, and there was a lot of people that came out and said, "Listen, this is going to end bloody for retail investors. You got to save them." But here's the thing: you've got to let these situations play out organically. And as Steve mentioned, there was a lot of intervention there. So we'll never know how this truly would have ended and in what time frame it would have ended if all of these other things had not come into play. The last thing I'll say is, I also push back on the notion that these were unsophisticated or cavalier types of trades because they weren't staked in fundamentals. This market has been away from fundamentals for some time. And what was pointed out is that you can have a fundamentally sound idea and still have breakdowns in the technical and execution aspects of the trade. And that is every bit as legitimate as having a fundamental bias. You've got to have a view and you've got to know how to adeptly execute that view. And both of those are equally important.
And while there are a lot of people who love fundamental analysis, Bono, and I think you said it right there. Fundamental analysis may not always be the right thing for every single stock in this stock market. And I think it was an interesting conversation that Mark Cuban had today on Squawk Alley when he said fundamental analysis may not really matter unless you're a dividend-paying stock. There are so many stocks out there where you are basically buying a lottery ticket, and I think he said that for effect, but you're basically betting on the company going higher. I mean, that's what it's all about, Guy, no?
Yeah, well, and a certain part of it, absolutely true. I mean, listen, I think we've avoided saying this because I don't think it's accurate. I think Bonawyn just said it. These weren't unsophisticated people. I mean, the people or group of people behind this understood more about convexity and volatility and derivatives and leverage than people that get paid to understand it. And they saw what was going on in GameStop, and they took advantage of it. So, I mean, I'm a big believer in Darwinism. As long as no rules are being broken and no laws are being broken, good for whoever was behind this. But I'm hard-pressed to believe this was just the retail community. I still think it was a group or a larger group that were pulling the strings. And we're going to find out over time.
Sure.
But to that point, I also think that short sellers are now going away. That's going to be problematic, and that's a conversation for another day.
Right.
But Remember, those short positions sometimes lend themselves as a speed bump on the way down. Those speed bumps might not be there going forward.
Yeah, I mean, the GameStop short position is down about more than 50% over the past week. So certainly that aspect of the story seems to be going away. But make no mistake in terms of people glomming onto trades, that has that has gone on since the beginning of time, Tim, and we've seen it time and time again. We see it with the big cap tech stocks, for that matter. What's on the VIP hedge fund list? It's every single big tech stock in the Nasdaq 100, all glomming onto the same trade, which is why we are where we are in terms of market concentration. I don't know. I mean, there's still some people
Yes.
There's still some people who made money on this trade, regardless of whether or not there are people who glommed on.
So right. I mean, and hedge funds hunt as a pack and have been acting for a long time in group thinks, and we've talked about this, and yet that there's seemingly nothing wrong with that, or is there? But the premise that fundamentals don't matter, I'm sorry, I'm going to push back every single day on that, and I do think. If we want to drill into GameStop, we can talk about some of the catalysts to board changes and whatnot, but ultimately, I do believe that at least the decline of the company's business was fundamental, and I think as far as the market, the great irony here is that think about the market in terms of how many people have come on our show in the last 10 years that largely are either short sellers or people that have been very critical of the market environment and said it's all been propped up by the Fed. Well, guess what? Here we are 10 years later, where the fundamentals of either traditional valuation metrics no longer work. And so I think I do buy it from a market's perspective because, again, market rationality or irrationality, we have seen this and we're going to continue to see it. But I do think that ultimately fundamentals on a stock-specific basis are going to be buoying how people should be
Sure.
investing in stocks.
But I think that's a good point. If you don't like GameStop, maybe you should blame it on Jerome Powell.
Shepard Smith here. Thanks for watching CNBC on YouTube.